Hey everyone, I am here today with a review of my investing for financial freedom recap. Okay, so this video is all about how to make great stock picks. And I know that I've gone on and on about this forever now, and maybe some of you are hearing this on repeat and are sort of getting bored, but I do have something special for you, and that is that I have a giveaway. Okay, so if you go down in the comments, below in the description, you're going to find something that I've written there. And what I have written is a link to where you can go to get a stock spreadsheet where I have done the work of tracking these stocks, a huge stock list, okay, that will show you which stocks in the market right now meet the metrics. These metrics over here that we're going to go over here in just a second. So if you want that, list, go ahead and sign up for it. It does get refreshed from time to time. So it's sort of like a living, breathing document. And once you kind of have your hands on it, you can bookmark it and it will refresh from time to time. It'll almost be automatic, or I'll come in every quarter and refresh it. And I'll give you kind of like some color coding there. So like red would mean no, not any good. Orange would mean has been good in the past, has some good attributes. Meh, it could be good coming up, maybe not, we'll see. So it's like a caution signal. This is very much like stoplights, right? And then green means go. You just have to decide if that's a stock that you like or not, okay? Because we're all very different and we have different choices that we make in different sectors that we would want to be in. Now, I will say a couple other things here before we get started on this, that like I'm making stock picks to trade options with. A lot of these stocks also work for long time holds, okay? But in order to trade options, I need a few things to be true about the stock. And I also find some good stocks that I eliminate just based on the sector they are in. And I'm going to tell you about those right now. The first one is that I eliminate all stocks that have to do with oil. Okay. And this is because foreign governments and changing political conditions around the world can really influence what happens with these stock prices. And it's just like another factor I don't want to have to deal with. I don't want to have to deal with oil prices soaring or tanking because of some political change of mind or hearts overseas or here at home. And it's just not something I want to consider with my options trading. Therefore, I do not options trade those stocks. So I kind of automatically make those red. I also do not like trading pharmaceutical stocks. This is because they are highly volatile based on like if the stock has a new drug that's coming out for approval or not. So there's a lot of speculation there that I don't also like to be involved in. It's just an extra thing that could go wrong and throw my trading off. So therefore, I don't trade those two types of stocks, and I usually mark them on red on my spreadsheet. There is one other thing, okay? Banks and financial institutions, they don't have profits and losses on their financial statements. So a lot of times on my little tracking sheet, it's going to show you that these stocks are like orange for that area. With these stocks, what we're doing is we're really looking at the charts and we're looking at the news to make sure that the news that's coming out about this company is good. So like, I don't know, a few years ago, there was like a lot of bad news about Wells Fargo. They weren't behaving very well. So that would be like a reason I would stay out of that stock and sort of be more interested. If I were to look at charts and find out that Chase had a good chart, I would go over there to Chase instead of being in Wells Fargo, if I was interested in being invested or trading a financial institution such as one of those two. Okay, so some of these things have some nuance to them, but overall, most stocks in the market are going to have these attributes if I want to be invested or trade with them. Okay, so the first thing I have to do is understand, do I understand what the company is? And is it a monopoly, industry dominator, and is it on trend? Okay, so if I don't understand who the company is, I have no business being invested in it because I don't know what kind of like news to look out there in the world to see if that stock is rising in stature or declining, or to see if there's a trend out there that would make that stock continue to grow over the time or for the market share to shrink. Okay, so I really need to understand that. Secondly, I love it when my stocks are monopolies or industry dominators. This is because it's very difficult for other companies to come in and compete with them. I love that as a shareholder. That is super important to me. You can do this sort of research by just thinking to yourself, like, what are the monopolies out there? So they are, just so everybody knows, like a Costco is sort of a monopoly in sort of those warehousey type spaces. I know Sam's Club is out there too, but they're not preferred over Costco. Amazon.com, total monopoly in a lot of places. Microsoft is a monopoly. Apple is a monopoly. Like the list kind of goes on and on. Okay. Some areas where you won't find a monopoly tends to be like Home Depot, Lowe's, Menards type of space. Like there's a lot going on there where these companies are sort of a little bit too similar. Home Depot and Lowe's used to be great stocks during the pandemic when the trend was that everyone was fixing up their homes. Okay. So you can kind of see how this works. So back then they were sort of like on trend and it was a better stock trade than it is now. They've had like significant just stalling, and then they're in their sales and stuff. They're kind of going up, but it's just kind of like stagnant. So there was a big boom, but the boom is kind of over. Okay. Outside of understanding the stock and knowing that it's a monopoly and industry dominator, you absolutely have to make sure that those 5-year and 1-year charts are up. If you're in the middle of a huge pullback like we were in April, the 3-month chart being off is less important. But I always wait to buy again when the stock market starts taking off, and I can see which stocks are taking off after there is a decrease in the market. So I tend to wait to see which 3-month charts after we have a sell-off are taking off first and dive into those stocks, okay? And avoid the ones that are just stalling out, okay? The next thing is that our revenue and gross profit on the financial statements up year over year. I'm going to show you how to look at that in just a moment on Yahoo Finance. And one of the 2 last questions is, do the institutions love this stock? Okay, so institutional ownership of the shares over 60% is a really good number. Anything that's under 60% kind of shows you automatically that the company isn't a monopoly or an industry dominator. Institutions look for those stocks because they're looking for the same thing that I'm looking for. They're looking for solid companies that are almost like guaranteed growth in a bull market. That's really what these monopolies offer you, honestly. I mean, there's no guarantees on the stock market, but there's a bull market and you're invested in a monopoly, you better believe it's going to go up. That's just the way that this works. And it works that way because institutions are involved. That's exactly why. Why? Because institutions have the amount of money that it takes to pump a stock price up. It's as simple as that. Okay, so all I do is follow along with what the institutions do, and that's how I make a lot of money and have my investments grow over time. And then the last thing that is really important, especially if there is ever going to be a pullback, is that stocks that pay a dividend are a real bonus here. That's for 2 reasons. The first reason is, hey, you get paid 4 times a year. I've never been mad when I got paid a dividend. Like never. Always liked that day. And then the next thing is that dividends prevent the stock from falling off as massively as stocks that don't have a dividend when there is a sell-off. This is because institutions love getting paid dividend payments. It sounds silly, but when they have millions of shares invested, they get millions of dollars back in dividends. So oftentimes they will keep money in the market, but they'll only keep their money in the market in dividend paying stocks when there's a massive pullback. So I'm going to go and show you real quick how to find this information on Yahoo Finance. And while I'm there, you might also want to check out the link in the description to see if you want to sign up for the stock list that I am sharing. Okay, guys, we are going to check in on Amazon and do a stock review right now of Amazon and see if it fits the metrics for a stock that we would like to invest in. We already discussed how it is a monopoly, so it hits that that sweet spot. It's definitely on trend as well, so it's kind of hard to argue that it wouldn't be going anywhere. 5-year, it's up 48%. 1 year, it's up 15%, and like between the 6 month and the 1 month, we're up as well. So Yahoo Finance, I wish it had a 3-month tab because that's my favorite tab to look at, and that's on Robinhood actually where I find that information. But looking at the 6 months and the 1 month will also be pretty significant for you to be able to make a decision here. So yes, the charts are up, so it passes that metric as well. So we are at 2 out of the 5 things. Now I look down here to see if there's a dividend. There is not a dividend. So it doesn't have that benefit of having a dividend. The interesting thing about Amazon is it does perform a little bit like a dividend stock. Institutions don't usually like to sell out of it, okay? And then we can look at holders to see how much institutional investment there is in it. And it looks like 65% is held by institution and 71% of the float is. So those are both good numbers. Anything above 60% is a really good number. Above 70 is fantastic. The float being above 70 is fantastic, okay? Next thing we're gonna do is we're gonna look at the financials. And what we wanna do is we wanna look at the total revenue and the gross profit. And we just want to make sure that these numbers are going up year after year in a steady, good looking clip. Okay, so we're going from 469 billion, those are billions there, to 513 billion, 574, and 637. And then this year is projected to be 650. That'll probably be revised by the end of the year to be the real number, obviously, and it could go up or down. And then we have gross profit, 197, 225, 270, 311, 319. So these numbers are fantastic. The company is bringing in more revenue, so they're finding more ways to get money from the consumer. And then when they take the money in, they are holding on to a significant portion of it to make profits. So you guys, this stock hits all the notes. The only thing that it is missing is the dividend, okay? And that's not a reason for me not to be invested. It's just something like the dividend is a nice perk, okay? Now, why don't we go over to another stock and I can show you one to really be wary of. And it is one of the retail traders' favorites. I really despise this stock for many reasons, mainly because it's so overhyped. And so we have a 5-year return of 220%. So if you buy, 5 years ago, you might be happy. The 1 year is up 25%, 6 month is down, and the 1 month is down. This stock overall has been downtrending since the market retraced in April when we had this tariff sell-off. Okay, it doesn't pay a dividend, so it doesn't get any dividend stability from it. This is really wild. I always am surprised by this, but it is only 50% held by institutions. That's a huge red flag. So Tesla being one of the biggest companies and most talked about companies in the world, and that institutions are only holding 50% of the shares, what this data is telling you is that institutions don't believe in this stock. They don't believe it can go up. They are not putting a lot of money into it. So therefore, why would I? If they have more money to play with, and they're like, they don't want to play in this playground, why would I? I wouldn't. I know I'm upsetting some people right now saying this, but I'm only telling you this because I love you and I want you to do really well with your money. Now, why is it that institutions are not attracted to the stock? And why is it that the stock price is just going down? Well, we're going to see why right here. Institutions review this information and go even deeper diving into all of this stuff down here that's very important to them. But I just do like a high level skimming, and then that gives me all the information that I need. If we want to review too, real quick, who Tesla is as a company, we can also start to shed a little light on another reason that institutions could be leaving. And I'm going to tell you what that is. There's 2 reasons they're leaving, okay? Number 1 is that Tesla used to be a little bit of a monopoly. They were the only car company that made electric cars, okay? Now they're not. There are many options to get an electric car out there. Now there are people that say, oh, but robo-taxi is going to be really amazing, and this robot, this Optimus thing is going to be really amazing. And I'm like, okay, that Optimus thing scares the crap out of me. I'm not really sure that I want a robot in my house that's as big as a grown man that I don't know what it's going to do because it's ruled by AI. Like, we'll see. We'll see. And how expensive is it? And do I have room for it in my apartment? Like, I don't know. Like, if I had an apartment, do I? I don't know. So I'm not convinced that that's going to be the next thing that everybody wants in their houses. Let's wait for it to come out and see. I'm not going to speculate on if that's true or not. And I don't think anyone else should either. Okay? Robotaxi. Do you guys have any idea how long Robotaxi has been declared to be coming out just next month and then it's never come out? it's been a long time. Like Elon has a lot to account for with broken promises there. And that's another problem with the brand is that overall he's not delivering on his promises. So the institutions who are really like, you know, go big or go home, you know, bring the bacon or don't, like come to the party. He's not delivering on what he says that he can do. So that is a problem for institutions because they need actual things to happen in order to stay invested in the stock. Okay. So the overall problem here is that Tesla is not doing anything that anymore that is on trend. And they're not doing anything that's monopolistic. They're not. Okay. They're saying they're going to, but that actually needs to hit the market in order for that to be relevant. Okay. So here we have our revenues. Okay. And our gross profit. And what you see is 53 to 81 to 96 to 97 and 95. So guys, this number 53 to 81 is pretty darn good. 81 to 96 is good. 96 to 97, not so good. Like they didn't do a whole lot to expand here. And then 97 to 95, this is telling you that analysts think they're not going to be able to pull in as much money so far this year. And they do have the data to suggest that they aren't going to be able to. So we'll see if they can pull a rabbit out of the hat. But right now the analysts are saying that's not going to happen. Okay, when we look at the gross profit, we got 13 to 20 and then 20 down to 17. So do you guys see how this is a problem here? They made a lot more money, or, you know, significantly more money. They went from 81 billion to 96 billion in a year, but their profit shrunk. That's a problem. Okay. And the next year they went up a little and their profits even got smaller. And this year they're even looking to be worse. So the company is taking in maybe more money, maybe less, like sort of in the same general ballpark, but it's having a spending problem inside in the house. They're spending too much and their profit margins aren't big enough. You could say that's because innovation is happening, right? Maybe that's the reason, but you know, when there's all these other companies that are doing really great with bringing in more revenue and large gross profits right now, what would make me enter Tesla right now? Like I gotta see that to believe it. Seeing is believing. Okay, the numbers make a believer out of me and the institutions. So that is a review on a stock that just isn't cutting it. It's just not cutting it. All right, let's do maybe one more stock. I'm going to do Microsoft because we don't talk about that one too often. And I'm actually very curious to see where this stock is. Okay. So let's look at the 5-year chart. This is the first thing I do. And we've got up 148%. The 1 year is up 12%. And the 6 month is up 19. And the 1 month is up 5. So that's awesome. Financials. These are probably going to be great. They are. They're fantastic. 168 billion, 198, 211, 245, 270. Gross profit 115, 135, 146, 171, 186. This is beautiful. Like I just see this and I'm like, oh, this is a thing of beauty. Okay. Sorry, I clicked on options. I didn't mean to. Let's click on holders and see how much institutional investment they have. Oh my gosh, this is gorgeous. The institutions love it. 75% held by institution. And where is the float? And 74% float. This is gorgeous. Like the institutions love this stock. So they will be able to give us a lot of stability in this stock price. Okay. Do we know what Microsoft does? Sure. They make software. They make some hardware too. And they are very invested in sort of like cloud technology, business to business type of functions with computing. And so that's what they do. You can tell that they're a monopoly just by like how many billions and billions of dollars even their market cap is. Okay. So I'll show you how to see that as well here. But okay. So the last thing that we want to look at here, market cap, $3.76 trillion. If you're wondering if a company is a monopoly or an industry dominator, if you see a market cap over $1 trillion, that's a pretty darn good sign. Okay. It's a really good indicator if you want an indicator, okay? So there's another tip for you. And then we have this forward dividend and yield of 3.3% and 60, and and then parentheses 0.67%. So yes, they have a dividend. It is a nice dividend. They've also increased the dividend over the years, which is a very good sign. And again, one of the reasons that you're seeing that there is such strong institutional investment in this stock is because of this dividend. Okay, it's because of the dividend. And that's also why the stock price keeps going up over time, is because the company is making money year over year. The revenue is increasing year over year. It pays a dividend. And so the stock price naturally wants to go up as more and more institutions get involved and buy shares. So that wraps our video for today. Again, go down to the description and you can see where I'm at with tracking a bunch of stocks on the market as to whether they are stocks that I'm interested in right now or completely not interested in, or if they are maybes. Stick around and we'll have more on this subject on the YouTube channel coming up in the next month or two.